Hey, it's Mike, and today I'd like to talk about the Chinese EV stocks because I definitely think they're worth looking at. As the market is selling off, it's time to kind of do your research and see where you want to do your shopping when the market does turn around. So, what I want to take a look at is clearly the three big EV makers in China: NIO, Xpeng, and Li Motors. Now, all three kind of have similar charts. You look at the 1 month chart here at NIO, and it has fallen pretty hard. It fell below its 50-day moving average, which is seen around $54, and now it's seen at $39. After hours, it moved down a little more, down to $37. So it doesn't look really good right now. However, out of all three, out of Li, Xpeng, and NIO, I would go with NIO first just because it's the largest company. And the largest companies, even though you may not get the most bang for your buck as far as returns are concerned, they'll tend to be the best the best funded. They have the best marketing. They're probably going to be more likely to sell more vehicles. Now, in the recovery, Li Auto will probably give you the fastest recovery just because it's the smallest company and you're going to get more speculative money into Li Auto. However, I'm thinking long term. I'm thinking what's a stock that you want to hold for 10 years? And the stock that I would want to hold for 10 years is NIO. Now, right now, I am not in NIO Motors. I have some Tesla, but when I do get more money and I feel more confident in getting into some more Chinese companies, NIO would be the first electric vehicle company that I would get into. Now, let's go ahead and look at Li and Xpeng because Li and Xpeng pretty much are almost the same size with Li with a $20 billion market cap and Xpeng at about $23 billion market cap. I think Xpeng has a little bit more of an edge. If you didn't want to go with NIO, I would go with Xpeng, and then I would make Li the third option, just because I think with Li there's going to be a little more volatility, and especially if you worry about volatility, then Li is going to be a harder stock to live with. But if you're looking for a compromise between a company that's pretty solid and a company that might give you some outsized returns, then I would make Xpeng the second choice. But like I said, NIO should be the first choice. Now, if you want to own all three, I think it's fine you own all three, but maybe you make NIO 3% of your portfolio, make Xpeng 2% of your portfolio, make Li 1% of your portfolio. That's kind of the mix I would use. I would just almost do like a ladder and make NIO the top of the ladder just because it's the largest company. It gives you the most stability for your portfolio. So that's what I'm thinking, but I would not get into these stocks until they're above their 50-day moving average, and that may take a while, maybe maybe another month before we have a full recovery. But when these stocks recover, they're going to recover quickly. I mean, you're going to see 20-30% up days. That's why you kind of want to start looking at these stocks now. Don't wait until they move up so far so fast that you're getting in kind of late in the game. So that's where I stand on the Chinese EV vehicles. If you have a different opinion, go ahead and put it in the comment section. But I think I would go with NIO first and put Xpeng second and Li third. Okay, so I hope you enjoyed this video. If you did, please be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, options, and stock trading strategies. Thanks a lot. Bye.